Welcome to Real Vision Crypto. I'm Ash Bennington. I'm joined today by Jan van Eck, Chief Executive Officer of VanEck Funds. Today, we talk about TradFi, Bitcoin, Ethereum, and exchange-traded products. Jan, welcome to Real Vision.
Thank you. It's great to be here, Ash.
It's a pleasure to have you here. Before we get started, tell us a little bit about VanEck. You guys have been in business, I think, for some 60 plus years. Tell us a little bit about what you do.
Sure. The philosophy of our firm really came from our founder, my father, Jan van Eck. And I would describe it, we're not a value shop, we're not a growth shop, we're really more, I would say, a macro shop, informed by the historical, I would say, perspective that the world around us is changing really quickly. And when you think about portfolios, you have to realize that technology and politics is really affecting your portfolio from a longer term perspective. So historically, we were the first to offer a gold fund in the United States in 1968. And at that time, gold was fixed at $35 an ounce. So why would you launch an investment strategy against an asset that's fixed in price? And not only was it fixed in price then, it had been fixed in price throughout the almost 200 years of U.S. history. And the reason is because the world changes and things maybe should be in your portfolio that haven't been in your portfolio before. And so that's the philosophy of the firm and the history around gold. Before that, my father had been investing in stocks outside the United States. After that, we got involved earlier, as did other people, in the emerging markets, the reemergence of China, and opening up of capitalism. But that's our perspective, and that's the backdrop behind crypto.
Yeah, in the 50s and 60s, investment outside of the United States in equities was a very innovative thing.
Yeah, well, it was also, it was doable, right? And the Dutch and the British had been investing globally for decades, centuries. So right. It wasn't, a shocking thing per se. But I think the mindset back then is almost like the mindset the same as today. We have leading companies with great technologies, that are really much stronger than the rest of the world. So why would you bother in, going outside our borders with political risk and all this other kind of stuff? And, the premise at the time was that Japan and Europe were going to regain their economic footing, and the companies there were trading at valuation discounts to those in the United States.
So in many ways, that's a perfect prologue to talk about digital assets, Bitcoin, Ethereum. How did you go down the rabbit hole in digital assets yourself?
There were a couple of people around me, word of mouth. I credit, my oldest son, Nicholas, but there are other kind of people who are really deep into technology talking about Bitcoin. It was really, I would call it relatively crazy, right? In 2014, 2015, 2016, very non-traditional. Yeah. For me, it was really early 2017 that I did the deep dive. I said, listen, I want, when I run VanEck, I just want there to be a VanEck in 10 years, and I don't want to get disrupted. I think luckily we started ETFs in 2006, so we've been part of a lot of disruption of active management. So I didn't want to get disrupted. So I said, what is this Bitcoin thing? And I asked my colleagues, and I said, I have no idea. So, you do what everyone does, hit the internet, start researching it, and within listen to podcasts and interviews of experts, and I came to the conclusion: look, I think this technology really does have the potential to be a competitor to gold, a permanent store of value in people's portfolios. And so I said, let's sponsor an ETF and get more involved.
So this, of course, that you're referring to now is XBTF. You were one of the first, I think probably the second Bitcoin ETF. Tell us a little bit about the product and what the need was that you saw that needed to be met.
Yeah, listen, people just want access to Bitcoin. Look, tens of millions of people have bought it directly or through centralized exchanges like Coinbase. The advantages of owning in an ETF form are simply ease of tax reporting, a more secure trading infrastructure, given that stock exchanges are just a little bit sturdier, or certainly were several years ago, than crypto websites. So those, and then sort of the regulatory infrastructure that makes it easier for institutions and lots of different types of investors to access Bitcoin. So yes, XBTF, it's a futures-based ETF, so it doesn't quite track Bitcoin spot the way we would like, but it's what the SEC has allowed. So, happy to get that to market several years after we have first applied.
Yeah, it was a long application process for everyone who was interested in doing this. Tell us a little bit about the decision to track the futures and what that means for investors.
Yeah, I mean, that's really driven by the regulators, the SEC. The CFTC had approved Bitcoin futures and Ethereum futures contracts. Of course, most normal investors don't trade futures, but that was the precursor. And the SEC said last year, well, we're comfortable allowing regular mutual funds to invest in Bitcoin futures. Now, whenever you invest in a futures-based strategy, you have to realize that the shape of the futures curve really will affect your overall results. And my classic example for that, I think it was in 2006, because of contango in the futures market, in the oil contracts, oil futures-based funds underperformed spot oil by 20%. So that's the risk, that the futures curve can distort, the experience of investors compared to spot. It's interesting with the tension in Ukraine and Russia. You see that today. It makes sense just to explain it to people that don't think about this all day long. Short term, people are concerned about oil supplies, but in the long term, they figure, well, we'll pump more. Someone will pump more, right? So that means it's in backwardation. Today's price is higher, closer to $100, than the price 6 or 12 months out. Bitcoin is the reverse. When Bitcoin rallies, it tends to, the futures prices tend to be higher. So it trades in what's called contango. And so basically it just means so far that a futures-based strategy performs slightly less well in bull markets and Bitcoin bull markets. In flat markets and bear markets, it doesn't really matter.
I should say we're filming here on February 24th. So obviously this is the day after of the invasion of Ukraine that began last night. So obviously a very volatile time in markets, in energy markets and equity markets, and also in digital assets and cryptocurrency. So talk a little bit about who you've seen taking up these products. So you've listed, I think, very clearly what you think the downside risks are, potential distortions, not only in price volatility of the underlying asset, but potential distortions in the futures curve having an impact on returns. Tell us about what some of the advantages are to investing in a futures ETF for Bitcoin.
It's just access right now. So I do like to add that in Europe, we've sponsored, they're much more open to offering crypto products. So we have 8 ETNs that really just do a much better job of tracking the spot price of basically it's Bitcoin, a bunch of what we call smart tokens, so Ethereum and their competitors. And then we just came out with a multi-token ETN that tracks the top tokens. So it's those products are more efficiently designed. But to answer your question about who's investing, I've come up with this new descriptor. I don't know if it's helpful. I call it sort of those Bitcoin 1.0, 2.0, 3.0, and 4.0. And I think that mainly means that maybe we're in 2.0 or 3.0. I think that you will get greater adoption. So there will be a 4.0 in our future, but that Bitcoin is an evolving asset. Where it is today is not where it was 4 years ago. And so who's participating from an investment perspective? I still think it's mainly retail and high net worth and maybe family offices. And that's very much what we see with our US ETF and with our European ETNs that track crypto. It's very heavily dominated by retail. Maybe a couple of hedge funds are involved, but institutions, it's still very early days. And a lot of them are just not not yet participating, especially directly in the tokens. What I see most institutions doing is accessing it through venture capital funds or maybe hedge funds.
Yeah, we should say ETNs are exchange traded notes, a different structured ETP, exchange traded product, which is the superset for all of these assets. Technically, it's a debt security, although it is an asset that underlies it. It doesn't pay a coupon like a traditional bond or note would. Very interesting time. I'm curious to hear your thoughts about what you see in the potential growth from the institutional space and how you guys are positioning yourselves for that.
The whole problem when talking about a disruptive technology like blockchain is that it tends to be very volatile, number one. And number two is you really don't know all the outcomes and all the consequences. So on the volatility side, I think most people see a chart. If you charted Bitcoin, right, and you know this, against the S&P, it's laughable, the ridiculous, the return differentials. And so I think you bring that to an investment committee, they say, like, I've never seen a fund or a product with this great performance. I have no idea how to consume it. And I think the answer is, first of all, take the historical perspective, look at prior disruptive technologies. I like to use the railroads, but you can also look at the internet. And what you see is that a lot of price appreciation happens before actually the adoption of the technology. So with the railroad, actually, by the time the East Coast and West Coast were connected, you'd already seen this tremendous run up in railroad stock prices, and then a pretty big 60% or so collapse after the actual connection happened, right? Actually, after the revenue was being generated by those transcontinental railroads. So my point there is, with blockchain as well, you have these big run-ups and you have to be wary. And that's what I was saying in the fourth quarter of last year, that the blockchain, the smart contracts are like any disruptive technology, and you have to scale into them over time. And people have had a lot of trouble doing that.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.